Welcome to Fibonacci Retracement and Extensions for Beginners series. In this introduction, we'll cover what these tools are, why financial markets love them, and the basics of using them in your strategies. Whether you're trading stocks, crypto, or Forex, Fibonacci can help spot key levels and works on all time frames. What is the Fibonacci sequence? Well, named after mathematician Leo Fibonacci, the sequence starts with 0 and 1, where each number is the sum of the two before it. 0, 1 is 1, 1 and 1 is 2, 2 and 1 is 3, 3 and 2 is 5, and so on. Well, so what? This pattern is woven into the cosmos. When the ratios between numbers approach the golden ratio, 1.618, spiral patterns occur, like in pinecones, hurricanes, and even galaxies. It represents harmony and proportion in the universe, which translates into financial markets, causing prices to move in proportional waves, mirroring nature's patterns. How does this apply to technical analysis? Well, traders use Fibonacci ratios to set targets and identify confluence in their strategies. They are great for take-profit target in momentum trading and in price discovery where no historical data is available. They can be used as stop-loss targets in Elliott wave strategies, retracement targets for investor buys, and support and resistance targets, which can be used in confluence with things like high volume nodes in your strategies, or Fibonacci trading strategies where Fibonacci patterns repeat over and over that you can take advantage of. Fib ratios are also considered a psychological self-fulfilling prophecy, as all market participants look out for these numbers and build strategies around them, causing prices to react at the levels in some form or another. Now remember, markets do not move in a straight line. They retrace, that is pull back, or extend irrationally beyond trends. Traders want to take advantage of this volatility with their edge, and using Fibonacci tools is helpful. Something to note before we go forward is the golden pocket phenomenon, which is the 0.618 to 0.65 Fibonacci levels. And this is the most common area for prices to complete retracements. So I'm going to demonstrate in TradingView what this looks like with the Fib retracement tool first. This measures pullbacks within a trend. I'll go into specific details on how to use them in the next video, but this is on the Euro US dollar 1 hour. We can see a bottom here has formed. Here's one I made earlier. And the top here is formed and the pullback begins. We use the Fibonacci retracement tool just in here, measure the length of that, and as you can see, this gives us the price breakdown in percentages here, and price pulls back exactly to the golden pocket 61.865 and moves up. It pulls back again and hits the 78.6, where it finds support, goes to new high. Now within the larger trend is also these smaller trends, which you can do the same for. Bottom, top, golden pocket, trend continues. Bottom, top, this one goes a little bit deep. We'll get into that in later videos, but the second one comes through, hits the golden pocket and pushes onwards. This repeats again and again. You can test this yourself on any time frame, any asset. Let's take a look at the Fibonacci extension tool briefly, so see how people set targets. Where am I going? Fibonacci trend-based Fib extensions. These ones are a bit more complicated, and I'll explain again how to find them, how to use them properly in the next video. You can see price extends to the 1.618 where it finds immediate resistance. We can look for more of these as we go along. Let's get rid of that so we can demonstrate the tool. Extension tool, we've got another one. Trend bottom, trend top, pullback levels. This one hits the number 2 level almost exactly and nearly extends to the 0.2618 there. And we can just keep doing this over and over again. 1.618, you see the patterns repeat over and over and over, and you can see how you can build strategies around this just by looking at that. But you don't want to use these alone, you want to use them with other tools and indicators. Now, it's important to remember that individual assets and asset classes like indexes and different sectors have unique Fibonacci characteristics. Many respect the golden pocket, while others can have shallower or deeper retracements on average, like the 0.382 or the 0.786. And these tend to have a direct relationship with volume and market cap. More on this later. And always make sure to backtest your favorite assets to see where it retraces to the most before using a strategy. That is it. That's my short summary of what Fibonacci retracement and extensions are and why we use them and how we use them briefly. So in the next video, I'll show you exactly how to use the tools, where to measure from, how to identify the tops and bottoms. Thanks for watching. Subscribe to get the latest video updates and drop any questions below. See you in the next video.